Hello, everybody. This is Victor here from Trend Following Trading for Beginners. And in today's episode, I want to talk about what is Black Swan event and how to handle it. Coming up next. Hi, everybody. Before the start of this podcast, I just want to say thank you for listening to my podcast so far. And remember, I'm here to help. If you have any particular query and you want to link up with me, you can basically contact me through Facebook messaging or Instagram or Twitter. And basically just ping me your question. I'm here to try to help you or at least point you in the right direction. So without further ado, here's this week's podcast. Hello, everyone. What is unexpected event on Monday? Within less than 24 hours after my last episode on the update on my trading on my sample portfolio, we just have a Black Swan event. Basically, the Saudi suddenly just cut its crude oil price I think from 1st of April onwards and threatened to increase its production by a million barrels per day or something after the talk with the Russians are broken down. And this is what we call a Black Swan event in general in a financial term, something that happened unexpected. It's something that totally out of the blue. You never expected it, and it just happened. It comes in, and an extreme event that just knocked your sixes. And when this news comes out from Saudi Arabia, I was sleeping, and the Asian market's just about to open, and boom, the US market just tanked. I think about 1,000 points or something. And then, and then what happened? The Asian market tanked. Japan tanked. Southeast Asia, Australia tanked. Then come to Europe, we tanked. Then it arrived at US and it tanked. It initially in the futures it triggered something the circuit break situation. Basically, I think the futures market was down more than 5%. I think around 7% or something. And then in US, there's some regulation if prices volatile move either up or down more than a certain amount, the market basically will shut down for like 15 minutes. If it happens again, then the future market is shut down until the main market open. I think that's what's happened on Monday. Basically, in the future market, I think the price went down like 1,400 points. And then it gone back up again a little bit, and then still about 1,000 points, and boom, gone back down again. So on Monday it was very eventful, and then as you probably have heard about the news, I mean overall, US on Monday dropped about 2,000 points, and today it picks up about 1,000 points or something. But then I think it's gone back down a bit again. So this volatile market just basically knocked everybody's sixes, and we call that a Black Swan event because it's totally out of the blue. And there was on last Friday, there's news that Saudi Arabia is in talk with OPEC members as well as non-OPEC members to talk about cutting outputs to keep hold of the crude oil price, so to speak. But then for some reason Russia is not playing ball, not willing to cut, and Saudi Arabia basically somehow got fed up or just throw the baby out with the wash water, and basically with the bath water, and then just declare on some basically Monday morning before the Chinese markets open, that is going to cut I think $6 or $7 per barrel or something, and it's going to increase I say about 1 million barrels per day from 1st of April onwards. But then it sort of left some legs in there, some gaps in there. It's not immediate effect. I mean, we are on the 10th of March, and so we got about 20 days or so before this threat kicks in. So give both parties, Saudi Arabia and Russia, to have a talk. But I think Russia it's got to be fed up, I think, overall, because you probably, if you track the crude oil, the Saudi has been trying to keep the price stable by doing cuts to encourage other OPEC and non-OPEC members to cut to keep the price at a certain crude oil price at a certain point, because basically the higher the crude oil price is better for Saudi Arabia in general, and they spend a lot of money basically on the social services and other things, benefits for its people in Saudi, and they need a certain amount of income from the oil. But unfortunately, the oil has been going down and down, and it doesn't help by having a trade war happening, and then there's a general slowdown in the crude oil requirement, so to speak, and it just basically keep the crude oil down quite a bit. I think at the time, early in the year, it was talking about $60 or something in that in that level. But I think there's some news I read somewhere or heard from Asia that Russia apparently was thinking for this year the price of crude oil is around. They were expecting around $50, and then next year, 2021, they're expecting around $40, because they take into the fact that the trade war might continue, and there's some issues that's going to happen between America and China, and just going to make the crude oil need of crude oil from around the world, slow down a bit. So it's sort of Russians do expect, the crude oil price coming down, and then like at start of the year, I started expecting similar thing, a sideways trade, so around $50, 50 something dollars, up and down, a couple of dollars, those kind of areas, and I don't expect much, probably more towards downwards pressure, because this general slowdown of trade in the world, so to speak. And then obviously the coronavirus comes in, and it's basically knocked the Chinese economy sideways. There are lockdowns now spread around the world, and there's also the need of the crude oil is dramatically cut, so to speak. So the price continued to go down, but I think Russia got really fed up overall about all these cuts. Every time when Saudi asked OPEC and non-OPEC members to cut, there's one person, non-OPEC, or one country never cuts. That is USA. The American has been producing, I think, shale gas for quite some time, and it's I think latter part of 2019 was now a net exporter. It can produce more gas, crude oils and stuff than its natural need. But for all this time, I think the year and a half, 2 years or whatever, the Saudi is asking people to cut. U.S. never cut it. So overall, what happened is Russia and Saudis cut their outputs from the Middle East. American then basically continue to produce as much as they want or can, flooding the market. So and then he basically tried to develop his own oil production, so that it doesn't need the Saudi or Middle Eastern oil. Because last time when they have the oil problems back in the 80s or something, they just don't want to be reliant on another third country for the oil requirement, which is fair enough. But now, basically, when Saudi want to cut the output of the crude oil, try to uphold the price of crude oil up to a certain level, American just for some reason it's not seems to be included in the equation. And all we always heard about is Russia is cutting, other Middle Eastern countries are cutting, Saudi Arabia is cutting, blah blah blah. But American don't. I mean, the news media in America around the world don't seem to talk about much about U.S. is producing so much uh, crude oil, and then all different combinations, and just never seems to cut. But also the fact that America tried to, I suppose, try to gain market share, and in this case, a lot of this new uh, productions places in America that come on stream borrow quite heavily and issue company bonds and all thing, and they really need the price of oil around 40, 50 marks or something. And Russia, I believe they just got to be fed up. America never cut, and then therefore, of course, when everybody else cut, America not cutting, Americans getting more market share, and Russia's not happy about it. And I don't know what other things has been going on between Russia and Saudi Arabia. Obviously, the talk breaks down, and then Saudi basically just say, okay, fair enough. I fed up, okay, F everybody. I just go to cut the price and flood the market. If nobody want to cut, I flood. Now it's bear some questioning. Saudi is in very close relationship with America, and in America, it really wants Saudi to be part of its ally so that it can get intelligence and get a holding and a footing in the Middle East. So I would have thought all these cuts and things, Saudi will have talked to American first, and before actually to go ahead or at least warn them. So either this Saudi Arabia has been in the background, is doing this with the full knowledge, U.S. knowledge about this, and then did what they did on Monday morning, or Saudi basically just said, I don't even want to talk to U.S. on this. I just do what I want. Basically, it's just throwing big tantrum, because whenever Saudi is cut, so I think it's feeling similar thing. Russia, whenever I cut, U.S. never cut, and what the heck? Why am I trying to hold the price up when because Saudi needs the crude oil a certain price, and then other countries are not playing ball. They just got a bit, totally fed up, or maybe there's other things going on. I have no idea, but this basically send a very bad signal to the market, and people basically just think, okay, what the hell is going on here? And then there's a big price drop. I think it was like 40 something, if I'm mistaken, or high 30s or some stuff. Let me check the chart and sort of like see what's actually happening. I mean, the oil itself is like about 40 something. That's right, and then suddenly just dropped down to the 30s. It's a lot. It dropped 20%. It's hell of a lot for anybody for the market in general to take it, and this again causes another crisis, another scare, and I think it probably jumps through a lot of hoops, a lot of stop loss on the crude oil, and again, so around the world, a lot of people probably trade crude oil in general and probably trade it quite heavily, and the price only gap it down and pass all the circuit breakpoints or whatever stop losses out there, and trigger a lot of, I presume, margin calls. So it just basically cut. People have to force to sell, and I believe that's what causes this turmoil. Black Monday, I believe, is now called. Not just 1987, whatever. It's now 2020 Black Monday. Yesterday, 9th of March, 2020, and causes effect around the world, domino effect. So everywhere else is cut, gone down 500 points plus. America's the worst, gone like 2,000 points down, and it's quite scary. And that is on top of what is already American have sort of got a big bad case of flu, and Dow Jones has been down for like 7, 8 or 10 days beforehand, and then this sudden crude oil drop and just forced the market go down to even more extremes. I mean, I was looking at RSI, And for my discretion system, I was hoping to trade it because RSIs of Dow Jones gone down to like below 20, I think 18 or 15 or something. It's very, very oversold. And I was hoping to do basically see if I can see a rebound. But I only do that as in my discretionary trade for my discretionary account and keep it small. And I never sort of expected sudden big large job. So on my discretionary account, I lose some money, and that taught me a lesson as well, of course. But my trend following system is fine because it's been taking my signal just like I do my weekly update, and it's on sale anyways on short side. So the sudden drop make the money. So on I lose money in my discretionary account because it's sudden drop, which I never expected, and not much because I traded very small now, but then quite a bit massive gain on the trend following system because I was fully loaded more or less. I mean, with the pyramid thing up and so forth, and this event basically just reminds me how in my growing up days, trading as a trader growing up days, how I see some of these gaps up and gaps down, how many times it hurt my account, and I just want to share with you, what we should do, or what I did to basically overcome, not really overcome, but have a way of handle this type of black swan event, something that's totally out of the blue, either maybe some financial reports from certain company that did something really bad. Then it's just something that the market didn't expected, and so last gap down, or maybe even the reverse, last gap up when you your trading signal saying saying go long or go short the opposite direction, that kind of stuff. So overall, but on Pacific, on black swan event, something that you never catered for, something out of the blue, and then like this, like what happened in Saudi Arabia. It really hurt your ego, hurt your bank account, and also get you really scared. It's like, what should I do? A lot of people, myself included, when I first started, when I saw this kind of unexpected event, I sort of freeze and I don't know what to do. And remember what I said about doing about turn on some of my trades when the market around the world market especially do a sudden turn going down because of a sudden realize of the coronavirus is near my doorstep or naturally landed in the US, and the US market suddenly just only take notice after it have happened 2-3 months already in Asia, that kind of thing. So for me, basically to handle all this unexpected black swan event, I basically in general always do this. Number one is the trading size. When I trade, I expect, it took me a long time to handle this. I expect all my trade fail, and I would expect myself at least I was comfortable losing that money. But at the start, I really don't want to lose any money at all. But over time, I realized, it's still about risk and management of your risk, and volatility is just how we make money as a trend follower. Without volatility, move up and down, there's no trend. Therefore, no trend. There's no way to make money as a trend follower. So there's always chance that every trade I made, I put on will make a loss, and sometimes could be bad, quite a big loss. And I always ask myself, can I actually take that big loss? And that's why when I always start small. And then when the market continue move my way, then I pyramid up. And that's one thing that sort of helped me a lot, because a lot of times if you have a small or medium account and you keep your trading size too big, I mean, any sudden event can knock your sixes, let alone black swan event, which can basically kill your account in hours or in minutes. So sometimes, like when you go to bed, next morning you wake up, your margin call comes in, because I do spread betting, and your account's, 90% of money gone, because the margin call came in middle of the night when you're sleeping. It's quite a disastrous feeling, that kind of thing. So to train myself, I always say, okay, keep the trading size small, and I'm willing to basically lose more. So this is why I risk a very small amount on my account, so that if things do happen which doesn't happen often. When I always get knocked on sixes like a black swan event, but when it happens, at least I'm able to handle it. And when my trading system say get out, I get out. And even though I was making money before, and then the market go a mild turn, and my trading system signal say get out, then I get out. But then the next thing is, if my trading signal say go back in the market, but do the reverse, instead of buy, go to sell, I do that as well. And this black swan event sometimes could work in your favor, because when the black swan event comes in, the market go really scared, and it will continue. Normally the price of certain market or whatever market is, it will continue to fall a bit until people understand what's actually going on, or calm down a bit, and then and then things might do either sideways or slowly moving back upwards. But at least if you go in quickly, just as per your system, sometimes you should make money as well. So follow your rules is very important. So for me, it's basically small size. Follow your rules. If your rules say get out, you say go reverse, then you just reverse your trade. But it takes a lot of time to learn this, because especially the mental state. You are making money, and then suddenly you're losing money, and you were hoping, you haven't touched your stop loss yet, and you're hoping the market will come back. But in deep down, you say there's a risk here that my position will be cut, and then your system comes in and say get out, and then you was thinking, oh, now I want to hold on because I was in profit, let's say £1,000 before. Now I'm down 100 quid or something, and you say, oh, potentially, always thinking about 1,000, but your system say get out. So I basically got out, and I always remember this rule: the first loss is usually the best loss. It's the smallest and the easiest to take, but it takes some mental juggling and training to actually do that, because a lot of time our brain just work against us, and our ego, basically, especially for mine, I suppose, our ego work against us, and we don't want to get out. We always hope and against hope that the market will come back, but a lot of time the market doesn't want to come back, and you get trapped if you don't get out early, because the market can continue to go the opposite direction than what you were hoping it going, and then you keep on losing more and more money. Remember, trend following, one of the way to make money is effectively good risk management. Okay, that's very essential, very important. And this is basically what I say all the time. And also, you need to basically stick to your rules. Your rules say what to do next, just follow it. And I would suggest you go and revisit podcast 42 about profit gap, because a lot of us, for both good and bad trade, profitable, not profitable trade, a lot of time we don't follow our system, especially when we have a trade that was making money, and then the market reverses and we got stopped out. Basically your system got stopped out. System said get out, then you get out, but you were still thinking, the profit that you can potentially have, and don't want to get out. That's what I said before. But the profit of your system, which you have analyzed and back tested, include all those ups and downs and gaps. Hopefully, because you take 2 or 5 years data, you should be, and see some of that in your data set, and to get what the actual the profit that your system potentially can give you, you really need to follow every signal, and it is difficult at times, especially black swan event. So it's very much of a human psychology, mental state training and analysis that you need to go through to understand how it works. So go back and just listen to podcast 42 and also my Christmas special about Mark Douglas. Go listen to those 2 episodes. It's going to really help you. The other thing is what you call the also the market most of the time don't just do about turn. Even black swan event. For example, for the crude oil, in this case, which Saudi Arabia suddenly cut something, but the oil price is already going down, and my short-term signals and also my long-term signal is already saying sell. And if I have followed through, which I did. And if you have also followed through, hopefully you did, then you will have make a lot of money. This sudden drop, which is in the correct direction, is in the sell side, and then a sudden drop lower make you loads of money. That's what I said at the start. My trend following system, I was making money, but my discretionary, because I see RSI so low, below 20, I will say, okay, that may be a time to catch a rebound. I know it's not something you should do as a trend follower, but I still have this urge mentally to try, so I keep in a separate account, do it very small, so it's damage anything, it just hurt very little in that separate account, which hardly have much money in it. It just basically keep my emotion in check, okay? Because I could never ignore those, and I always have the urge to try to do something on that one. I basically, okay, to counter that, I follow through my urge, but using very small trade. So if it happens, if it works, fine. But if it doesn't work, it won't hurt me. It's just on the side, just me. So slowly over time, I just do less and less on that. Slow, like RSI, I only try to catch a rebound when it's below 20. It works sometimes it doesn't work, but I keep one side, and that's just me. But if you have followed the trend falling way, you see your signal. We have told you to go short on crude oil, and this sudden move down, you gapped it down, whatever Saudi have said wouldn't have hurt you. In fact, it will make you money. You will have wake up the next morning and say, wow, I make a lot of money. And also the side effect of this sudden large drop from the crude oil obviously is causing a lot of stop loss kicks in, and then there's margin calls and stuff forcing other people have to cut their losses, are forced to cut their position to cover the margin call and so forth. So it causes the index around the world to fall down even further. And again, if you have, like I said, the last bit I talk about following your system may have said you about turn, and then if you did and follow through, you have also catch that as well. So this is double whammy for my profit. I wouldn't say double on the reverse, on the positive thing. So I able to catch the crude oil price down, but also able to catch the index price going down, because I did about turn. I was hurt before. Remember what I said in my last episode, when I was along, then suddenly this sudden fear hitting America. I basically all my indices was stopped out, so to speak. My system said get out, and I was losing money. But then the continuation of the drops in around the world, and especially in US, has basically helped me to recruit or cover all my losses and then some. Then this is last gap on Monday really make the chicken come home to roost, so to speak. Make a lot more money. Obviously now it's we bound a little bit, so we just have to wait and see. But I always believe this. There's always some signal in the market. It actually tells you. It's very much like birds. They know when the weather has changed, and therefore they need to go to warmer weather, so to speak. They always know. And you watch out the sign. You look at your chart and look at your system, and look at the price. What your system is actually tell you. You follow through. You have a good chance to catch some of those trends beforehand. And also the other thing is, I would say watch a handful of shares. I mean, if you have not looked at crude oil as a tradable market, you might not have benefit from it. You feel the side effect. Let's say you only trade indexes or some shares and got basically large movement moving downwards. But if you have watch crude oil, you can basically catch the losses early on, and then we've basically catch the trend going down early on, and they make quite a bit of money out of that. So this is another thing why I only watch a handful of shares. I used to use share scope basically just to scan the market, or UK or US market. That's up to a certain amount of capitalization, and then say okay, if it's and then do some filtering. Then if this comes out with some shares, I bought every share. But the problem is I only have limited money. Sometimes it comes out with a handful. I just couldn't spread myself, and it only take the best. I basically the one that with the largest capitalization. I'd only take that one. That's as far as I'm concerned. But When I change, only just look at a limited set. Let's say my personal, I'm looking at about 42 at the moment, and I just look at those one, and are able to capture, basically watch out the signals, and then the charts of those shares as well, and indices and forex, able to to be there to take advantage of it. So sometimes you have a smaller set of shares, concentrate on just those, or smaller group or instruments to look at, and don't just try to. What I'm trying to say is don't try to be like a bees, flying at every flower to collect your nectar. Basically, just watch out. Let's say a handful of flowers, and just go around those, and there's you're able to still make money out of it, and you don't spread all your money all around the different flowers, so to speak, or different shares in this case. Okay. The other thing that really helped me is, I have said that already before. You need to train your mind about taking losses. You need to be okay with taking losses. There's no point out there. You're out there trading and expecting every trade to be profitable. Even if you trade yourself, train your mind that you're okay with taking losses, because you follow your system, and your system say go, you go, and even you stop, your system say get out, and you lose money. Fair enough. But sometimes, and gaps happen, gaps may not in your favor, and then you get hurt a lot more. You need to be okay to do that as well. Okay, learn to lose money. Because if you follow your system over long term, you should make money. But sometimes, yes, you have some gaps on those, and you basically have to, just take it. This is just the price of doing business in trading. It's nothing much you can do about it. Which lead to my next bit, which is a good trick I learned from Robert Kiyosaki. One of his book talks about his military past when he joined the army and fly the helicopter. One of the things that he said in his book, I can't remember which one, but he actually said that when he was learning to fly a helicopter, part of his training was by the instructor to learn how to crash landing safely. So the instructor will basically just make the thing, don't fly, or switch something off and things, and then Robert have to learn how to handle the helicopter and try to land it properly, and that is part of his training, and he done that quite a few times, but it saved his life. What happened was, I think his book say he got shot down about twice or something, or 3 times something, and was able to crash land safely, and everybody was hurt in when the crash landed, but nobody's died, and he's still alive, obviously, writing his books. But I think that's useful thing to have for us as trader. We need to prepare ourselves to take those losses. I know those large unforeseen black swan event don't seem to happen, but there's this. British have said a way to say, the flood that happens only once 100 years seems to happen a lot more often nowadays, and we need to learn and have a system to take that into account. And so I think this trick is good. Imagine yourself that you have taken a trade, and then the trade suddenly do about turn and hurt you. Are you able to handle that mentally, not just following the system, but mentally? And then next you think of what happens if there's a large gap that go against your position. Okay, what should we do? Can you handle that? And imagine that, and then think of a way to handle it, and not just set up some system to do it, but actually mentally rehearse. This is what I'm going to do. This is how I'm going to take next, and this is what will happen to my account. Okay, it's negative, but at least you think about it, mentally thinking it. You're tricking your mind to think about it. Then next time when it actually happens in front of you, you're more, to me anyway, I find it easier to basically take my signal. My signal say get out, even though I could have potentially win thousands. But unfortunately, the market do about turn. I just have to get out and just follow my system. But it took me a long time. It's something that I should learn and try to do that. Okay. Also, at the end, the last bit basically is this. Sometimes, especially when you're at the start, it's difficult to handle that. When you have to get out and lost quite a bit of money. So I would say in that situation, especially at the start, to learn how to handle losses, it's okay to stop. it's okay to take a break. The market will still be there tomorrow for you. If your mental state is very clouded, unclear, and not very happy, get out. Just leave trading for a week or two, even a month if you want to. The market will still be there. Yes, sometimes we miss some large movement, large trades, but the first thing first is not about missing a trade. The first thing is try to keep your losses small, and you just got hit on the head by a bullet train, so to speak. You really want to calm yourself down mentally as well as you might have to rebuild your account, and you might most of the time I think it's more like your mental state, your egos get hurt, get bruised. You need to calm yourself down, go and do something else, and come back. And how I did is basically I go back to my simulation, I check my account, check my simulation trade, and just see if just when I replay the situation that my system actually will do the same thing again. And it looks like it's the case. The next time what I do is I basically trade a lot much smaller. So this is why I always, I use the pyramiding way, very similar to what Jesse Livermore used, this probing trade. The first trade is quite small, normally, basically a fifth of what I initially want as a whole that I want to put down on a particular market, because I could never tell if this trade I've just put on will be a winner or not. I could have lost all that trade at the start. I don't know, but I basically just add on a bit more if the trades continue to go in my favor, and that is what I learned after I review my losses. So like Elon Musk, I think he famously say, you learn a lot more from your failure than your success. I think not just Elon actually talk about Elon Musk. Other successful people also talk about it. So when you fail, when you got knocked the breath out of you and your account get destroyed, never give up. But as part of that grow to go back to become more mature, better trader, you really do need to, think of how you can handle the losses, because losses will happen. It's very much like a nurse scared of seeing blood, or a dentist scared of bad breath. It's part of the job. You have to do it. If you want to do trading, learn to handle losses. It's very important. And also learn to handle unexpected event in this case. So I hope you found this podcast useful, and I'll speak to you soon. Bye for now.